In the vast and often tumultuous ecosystem of global finance, certain figures emerge who redefine the very nature of the hunt. Charles Chase Coleman III is one such individual. He is the founder of Tiger Global Management, a firm that has, over 2 decades, fundamentally altered the landscape of technology investing. Coleman, a man rarely seen and even more rarely heard in public, operates with a quiet intensity. His approach stands in stark contrast to the boisterous world of Wall Street. He is a predator who relies not on a thunderous roar, but on meticulous observation, swift action, an almost preternatural ability to identify the next great opportunity long before the rest of the herd. His story is not merely one of financial success. It is a narrative about evolution and adaptation in a rapidly changing world. Tiger Global Management became Coleman's instrument for this new style of investing. It is a unique hybrid, a creature that stalks the public markets and the private wilderness of venture capital with equal prowess. This dual focus allowed the firm to move with an agility that left many traditionalists bewildered. While other hedge funds remained confined to their established territories, Tiger Global roamed freely, blurring the lines between different asset classes. It became famous for its speed, conviction, willingness to place enormous bets on young, unproven companies that would later become household names. This pioneering spirit has made Tiger Global one of the most influential and at times controversial investment firms of the 21st century, a testament to the vision of its quiet founder. The story of any great leader often begins long before they step onto the world stage. For Chase Coleman, his path was shaped by a remarkable heritage. He is a direct descendant of Peter Stuyvesant, the last Dutch Director General of New Amsterdam, which later became New York City. His academic journey was equally distinguished. He attended the prestigious Deerfield Academy. From there, he went on to Williams College, where he majored in economics and Spanish. It was here that his analytical skills were honed, providing him with the intellectual framework to deconstruct complex market dynamics. Upon graduating in 1997, Coleman joined the venerable hedge fund Tiger Management, a firm led by the legendary investor Julian Robertson. This was no ordinary entry-level position. It was an apprenticeship under a master of the craft. Working directly with Robertson, Coleman was immersed in the art of fundamental analysis, learning how to dissect a company's balance sheet, understand its competitive advantages, and assess the quality of its leadership with uncompromising rigor. This period was profoundly formative, developing the core principles that would become the bedrock of his own firm. Chase Coleman embodies a fascinating paradox. He is a man with deep roots in America's old money aristocracy, yet his fortune and fame were built by mastering the disruptive, fast-paced world of new money technology. On one hand, he possesses the understated, reclusive style often associated with established wealth. He shuns the media spotlight, rarely gives interviews, and prefers to let his firm's performance speak for itself. On the other hand, his investment philosophy is anything but traditional. Coleman demonstrated a visionary understanding of the digital revolution, long before it became a mainstream investment thesis. He saw that the internet was not just a new industry, but a foundational technology that would reshape every aspect of the global economy. He combined the meticulous fundamental analysis of his old money training with a new money appetite for growth and innovation, creating a powerful and unique investment hybrid. This blend of old and new is also reflected in his personal life. He is a family man, married to Stephanie Erklintz. They are known to be active philanthropists, supporting causes related to education and health, often with the same discretion that characterizes Coleman's business dealings. This quiet public profile allows him to focus intensely on his work, operating like a scholar investor, far removed from the noise and chatter of the financial media below. The story of Tiger Global Management begins at a pivotal moment of transition. In the year 2000, Julian Robertson made the momentous decision to wind down Tiger Management. However, he was not finished with the business of investing. Instead, he decided to channel his energy and capital into the next generation. He identified his most promising young analysts and provided them with seed funding to launch their own funds. At the very top of this list was 25-year-old Chase Coleman. With $25 million in seed capital from his mentor, Coleman founded Tiger Technology in 2001, later renamed Tiger Global Management. From its inception, the fund was infused with Robertson's philosophy. Rigorous fundamental research, focus on quality companies, and long-term investment horizon. Coleman carefully assembled a small, elite team, including Scott Schleifer, who would lead the firm's private equity arm. The culture at Tiger Global was intensely demanding and analytical, focused on developing deep understanding of business models and competitive advantages. This scholarly approach set the firm apart from many hedge fund peers focused on short-term movements and complex financial engineering. The team scoured the globe for promising companies developing expertise in emerging markets, particularly China and India, long before it became fashionable. This global perspective, combined with disciplined growth investing, allowed the firm to deliver impressive returns in its formative years. The cub had left the den not to replicate its parents' past, but to forge a new path and begin its own hunt in the evolving wilderness of the 21st century economy. As the first decade of the 21st century unfolded, Tiger Global began a remarkable transformation from a public equity fund into a global investment juggernaut. The key was a strategic expansion into private markets, applying hedge fund methodology to venture capital. While traditional firms took months for due diligence, Tiger Global applied deep research, rapid decision-making, and willingness to write large checks. The move was revolutionary, creating a formidable force in the tech ecosystem. Their key investments read like a who's who: Facebook, LinkedIn, Spotify, JD.com, Stripe. Each bet shared a thesis: market-leading companies with huge addressable markets and strong network effects. International expansion was critical. While many US funds stayed focused on Silicon Valley, Tiger Global invested across Asia and Latin America. By 2021, the firm hit an astonishing peak. Assets under management swelled to over $100 billion, drawing capital from the world's largest institutions. Public and private funds were outpacing the market, making Chase Coleman one of the most successful money managers of his generation. The golden era was defined by speed, scale, and conviction. Tiger Global wasn't just participating in the tech boom, it was shaping it, fueling companies that redefined how we live, work, and communicate. Every great story has its moment of crisis, and for Tiger Global, that moment arrived with stunning force in 2022. After a decade of seemingly unstoppable growth, the firm faced a perfect storm of macroeconomic headwinds. Soaring inflation prompted central banks to aggressively raise interest rates, fundamentally changing investor calculus. The era of cheap money that fueled the tech boom came to an abrupt end. Growth-oriented technology stocks, particularly those of unprofitable companies, were hit hardest. This was the very heart of Tiger Global's portfolio. Market sentiment shifted overnight from growth at all costs to demand for profitability and positive cash flow. The impact was brutal and swift. The firm's flagship hedge fund reportedly fell by more than 50% in the first half of 2022 alone. This period brought intense scrutiny and criticism. Pundits who had once praised the firm's genius now questioned its methods, arguing that Tiger's rapid-fire strategy lacked sufficient due diligence. Critics claimed the firm had prioritized speed over careful selection, contributing to an unsustainable bubble in private market valuations. The sheer size of losses made headlines worldwide, and questions arose about whether the Tiger Global model was fundamentally broken. In the face of crisis, Chase Coleman and leadership did not panic. Instead, they fell back on disciplined principles instilled by Julian Robertson. They conducted thorough portfolio review, marked down private investments realistically, and began looking for opportunities amid the wreckage. The Great Downturn was a severe test of resilience, a stark reminder that no strategy is immune to market cycles, and even the most successful predators can be humbled by environmental change. The devastating downturn of 2022 served as a powerful catalyst for change at Tiger Global, forcing introspection and strategic realignment. Survival in the unforgiving world of finance depends on ability to adapt, and Tiger Global began demonstrating this crucial trait. The primary shift was a significant slowdown in investment pace. The days of deploying billions across dozens of deals quarterly were over. The firm became far more selective, focusing capital on fewer, higher conviction opportunities, emphasizing fundamental strength over market share capture. Strategic pivot was accompanied by leadership shifts. Scott Schleifer announced transition to senior advisor role, marking the end of an era. This signaled move toward more institutionalized, collaborative leadership, designed to navigate complex market environments. The firm renewed emphasis on public equity business, seeking opportunities in undervalued public tech companies punished by market correction. A core component was deeper engagement with existing portfolio companies, adopting a more hands-on approach versus previous passive capital provision. Working closely with companies on cash conservation, operational efficiencies, and clear paths to profitability. Transforming from capital provider to active sustainability partner. The recovery has been gradual but steady. By demonstrating willingness to adapt, Tiger Global began regaining its footing. The firm successfully raised new, smaller funds, indicating institutional investors retained faith in Coleman's long-term vision. They began seeing high-conviction bets show immense potential, such as their investment in OpenAI, proving the Tiger was learning to hunt in a more challenging wilderness. The legacy of Tiger Global cannot be fully understood without acknowledging its place within the broader Tiger Cubs ecosystem. Dozens of successful managers who began under Julian Robertson's mentorship. When Robertson closed his fund in 2000, he didn't just return capital, he seeded a diaspora of talent that reshaped the hedge fund industry. Chase Coleman is arguably the most successful of these cubs, but he's part of a distinguished fraternity, including Ole Andreas Halvorsen. This shared lineage created a unique network of common principles. All Tiger Cub funds adhere to Robertson's core tenets: deep fundamental research, concentrated portfolios, long-short strategies, and long-term perspective. They often hunt the same territories, sometimes back the same companies, creating a powerful, informal co-investor network. They're competitors, but bonded by shared heritage and mutual respect. Tiger Global, however, stands out. Most cubs stayed in public markets, but Chase Coleman applied the Robertson playbook to private venture capital. This was his innovation, realizing the same principles for assessing management quality, competitive moats, and market size could spot winners earlier in their development. That move set Tiger Global apart, capturing a different, often explosive growth vector that distinguished it from its Tiger family members. The Tiger Cub's legacy proves the power of mentorship. Robertson taught analysts how to pick stocks, how to think, how to build businesses, and how to cultivate excellence. Coleman and peers created multi-generational impact, training analysts who started their own firms, creating Tiger Grand Cubs. This sprawling family tree, rooted in Tiger Management's den, is one of modern finance's most dominant forces, with Tiger Global roaring as one of its strongest descendants. The journey of Chase Coleman and Tiger Global is a powerful saga of ambition, innovation, and ultimately resilience. A story encapsulating seismic shifts in the global economy over the past quarter century. Coleman began as a gifted apprentice to a master, taking timeless lessons of value investing and applying them to the untamed frontier of the digital age. He built a firm that defied categorization, a hybrid predator that hunted with equal success in established public markets and dense jungles of private enterprise. The firm's rise was testament to clear vision. That technology was the driving force of modern value creation, and its growth was a global phenomenon. The challenges faced, particularly the harrowing downturn of 2022, are as much part of its legacy as its golden era of success. The stumble was a profound lesson in humility, a reminder that even formidable strategies are subject to unforgiving market cycles. Yet it is in response to adversity that the firm's true character is revealed. Rather than collapsing, Tiger Global adapted recalibrated strategy, slowed pace, and refocused on disciplined long-term investing. This capacity for reinvention is perhaps the most critical lesson. Success is not a permanent state, but a continuous process of learning and adaptation. The firm's ability to navigate new terrain of higher interest rates and geopolitical complexity will be its ultimate test. Its bets on foundational technologies like artificial intelligence suggest Chase Coleman's focus remains firmly on the future. The legacy will be defined not just by billions made during the boom, but by ability to endure and thrive in challenging environments that followed. Ultimately, Coleman's story is inspiration, a narrative about the power of a clear idea pursued with relentless discipline and intellectual rigor. He demonstrated that one can honor tradition while simultaneously shattering convention, building a firm that not only generated immense wealth, but fueled a generation of innovators, permanently altered the mechanics of high finance. The roar of the tiger may be quieter now than at its peak, but its presence is still felt across the entire investment ecosystem. It stands as an enduring symbol of how a quiet, focused predator, guided by vision and resilience, can forever change the nature of the hunt. Thank you so much for watching. If you enjoyed the video, please hit that like button and subscribe to the channel to stay updated on all things numerical and mathematical. Thanks again, and until next time, stay calculating, my friends.